Good evening, good afternoon, good morning to wherever you are in the world. Welcome back to another episode of the Coffee Hour. Today, we have some really crazy news. I'm sure you guys have already all heard about the Supreme Court basically, going over Trump's tariffs. So we're going to be talking about that. We are going to be talking about the impacts on, least the commodities market, specifically gold and silver. We're going to be going over some Nvidia and OpenAI news. And, we'll just try to keep this stream short because today is Friday. And, I also have places to go and be, so I have a hard stop. All right. But I do appreciate everyone joining in. Let's get into the show. And again, as always, I appreciate you guys for joining in on this stream. All right. So let's get into it. All right. So let's get into the first part. Hey, we are looking green, guys. We are looking super green. Okay, today we actually did pump up a little bit, so that's nice. A lot of the big players actually went up in value. The tariff stuff, obviously the tariff stuff was the big news for today. I was actually surprised, and of course, this is kind of in hindsight, but I was a little surprised that the market reacted so favorably to the tariff debacle that's going on. Of course, we're going to cover more of that here in just a moment. But we do see some of the big names like Apple, Nvidia, Google, and Amazon, gaining some traction here. And maybe this is that, pivot back into these software companies, right? This is that pivot back into technology. We also see, software applications took a pretty decent hit. All right, we're going to be covering something from Anthropic going over cybersecurity. And I think this is a massive, massive deal, okay? Because now you have the cybersecurity industry under attack by AI. And we're going to go over that, all right? My background is technology. My background is in kind of that realm. So I'm going to just offer some of my thoughts on it, right? But I would say that a lot of people who are in that realm, who are in that, cybersecurity software realm, you guys really, really have to keep an eye on what's happening with artificial intelligence because it is absolutely coming after people's jobs. All right, for financials, doing really good here. All right, credit card services. Like I said, everything looked pretty good across the board. Oracle, massive hit. I couldn't find really any news, about Oracle, but it looks like Oracle took a pretty nasty dip. All right, going into the market. Let's see real quick. So we have Skeptic in the chat. Hey, man, I always appreciate when you guys join. Thank you, Skeptic. If we have time, we'll go over some of the ETFs. All right. I totally forgot to look at some of the ETFs you had posted in the Discord. I definitely would have liked to go over that stuff. And I do know that WPay today is changing their strategy or the updated prospectus takes effect. So we'll see what that brings for WPay holders in the future, especially on Monday. We have Sean in the chat giving us a nice, happy, smiling emoji. Man, I hope you're going to have a great weekend. All right. I knew it was going to happen regarding the tariffs. Well, I hope you got a Kalshi bet or at least a poly market bet. All right. I mean that would have been really awesome, or maybe a Robinhood prediction market, bet. But anyways, guys, still feeling under the weather. So hopefully today over the weekend, gonna get some rest, and hopefully this will be the end of it. I'm feeling much better today, so I apologize in advance if my voice is still coming off as kind of coarse. All right, but anyways, the S&P 500, we are doing pretty good for the day. All right, up 69 basis points still for the year to date. We're not even breaking a percentage point. Okay, but I think with the tariff situation, kind of still getting ironed out. We're going to see if that really has a big impact on the stock market as a whole. I could not really, I was really trying to think how could these tariffs getting rolled back, what the impact would be. I know it's going to create more uncertainty, or at least, some type of an uncertainty, right? So, gold and silver obviously going to do well, right? Or at least, go up. But for the stock market, it's like, what, if anything, could the tariffs have? Like, what kind of impact? And I saw a note out there saying that, there is a potential that there's going to be like $174 billion in payback that the government's going to have to go through with. And that's still up in the air. That is a potential outcome. And if that happens, some of those refunds are probably going to go back to these U.S. companies. At least that's what the article was saying. Could it go back to companies overseas, et cetera, et cetera? I have no idea. But, as a U.S. consumer, it's like we just keep getting screwed, right? It doesn't matter what it is. We just keep getting screwed because now you have all these companies that are going to possibly get that rebate, from the U.S. government, and they've already made profit off of the U.S. consumer. So again, it's just one thing after the other with us. Let's see. So Sean says, I knew the market was going to go up if the tariffs got struck down. Man, that's awesome. Like I said, man, I hope you placed your bet. Okay. So for software, again, another sell-off. Okay. Another sell-off for software. Not good. Year to date, down 21%. That is still not good. Bitcoin is following, right? Bitcoin didn't have a good day either. It's still below 70,000, still hovering around the $66,000, $67,000 range. Year to date, you guys know this, we are still down 22%. Okay. For gold, all right, a nice little jump up. All right, a nice jump up. And we are up almost 2% for gold. Again, when there's uncertainty, when there's, just risk out there, especially when it comes to U.S. monetary policy, well, this is what is going to cause gold to go up. Excuse me 1 second. Oh my God, thank God for coffee. Okay. Looking at silver, silver had a really nice pump today. Absolutely nice. I almost bought AGQ, which is a 2x leveraged silver position. I really thought about it in the very early start of the trading session. And I was like, no, like I still don't know what the impact of these tariffs are going to be on the market. I'm still not 100% sure. I mean, with gold, you know for certain, but with silver, I don't know. I just don't know. But the story is still that the United States is trying to wean off supply chains from China. At least for all the other commodities, all the other precious metals, critical minerals, et cetera, rare earths, all that stuff. Right? They're still trying to get away from that. So I'm just thinking like out loud. Would it be a good swing trade? Unfortunately, I did not get in, right? I would have walked away with about, an 18% gain, maybe a 20% gain. Would have been really, really nice. But hey, it is what it is. But silver had a really nice pump today, guys. And that is a good sign, right? Because again, if we look at the 1 month, it had this really, really bad sell-off. But it's down almost 37%. Holy hell. But it looks like it's starting its trend up, right? Up already 15%. So we will see and continue to monitor that. And this is from February 17th to today. All right. It's already up almost 16%, 15.5%. That is pretty damn crazy if you ask me. All right. Okay. Bitcoin, we already kind of covered. Again, nothing's happening there. I just want to show this because I think it's funny. This tells a lot, right? This really does tell a lot. It does tell a big story. All right. So the joke is point of view. You got liquidated during the 2025 tariff tantrum. And today they ruled tariffs are illegal. And it's just a guy drinking his coffee, right? I think that is hilarious because there was a lot of stress during Liberation Day, right? Back in between February all the way through April, there was a lot of stress for a lot of people. And when that Liberation Day came, just seeing a huge drop to the downside, almost 10%, I think, in a single day. I mean, that was really scary. I myself had a ton of margin at the time, so I was definitely sweating bullets. I think I was 8% away, from a margin call. I ended up surviving it, right? Didn't get margin called, thankfully. But again, that drop is absolutely brutal. That drop was absolutely brutal. But anyways, shout out to the people who, got screwed over back in April, only for the court to rule that tariffs are illegal today. So anyways, moving on, guys. We had Scott Bessent that had shared some thoughts. So we're going to listen to what he has to say. And this is, again, after the Scotuses, the Supreme Court of the United States. This is after their ruling. So let's listen in on what he had to say.
I would also like to take a moment to address today's Supreme Court ruling. And I would note that I did not change a single word in my speech post the ruling. President Trump will always put our national security and Americans first. And as I have said before, the president has multiple tools in his toolbox. Let's be clear about what today's ruling was and what it wasn't. Despite the misplaced gloating from Democrats, ill-informed media outlets, and the very people who gutted our industrial base, the court did not rule against President Trump's tariffs. 6 justices simply ruled that IEEPA authorities cannot be used to raise even $1 of revenue. This administration will invoke alternative legal authorities to replace the IEEPA tariffs. We will be leveraging Section 232 and Section 301 tariff authorities that have been validated through thousands of legal challenges. Treasury's estimates show that the use of Section 122 authority, combined with potentially enhanced Section 232 and Section 301 tariffs, will result in virtually unchanged tariff revenue in 2026. And
okay, it might help if I have this on, not on mute. But anyways, Secretary of Treasury Scott Bessent basically summarized that, that the Trump administration is going to utilize a different set of rules in order to come to the same conclusion. And that is, a fundamental piece of Trump's whole administration's plan. And that is, implementing tariffs. So they're going to go a different route in order to get those tariffs still in place. So I wouldn't say that the tariff stuff is over, or the tariff debacle is over. We could very well see that, there will be probably more legal battles in the future, probably a couple more executive orders, who knows? But it looks like that they've already have a workaround, or they have a backup plan to this ruling. So, which sounds really kind of crazy, sounds kind of crooked, but it is what it is, guys. And we'll just have to wait and see how, how this ends up, again, probably in court. All right. So, do you have an opinion on YieldMax announcing major changes to how YieldMax works? I totally forgot about that. I meant to include that in this stream because I did want to offer some of my thoughts. Let's see if I could find it real quick since we're already on the topic. Give me a moment here. Let's see. I got to go to YieldMax for this one. YieldMax ETFs. So yeah, they did. I did see. I know there's a whole lot of hoopla about this, about these changes. Now, where the heck are the changes? And maybe it'll help. I think they're really trying to. Here it is. I think they're really trying to win back a lot of their fan base or investor base, whatever you want to call it. I think they're really trying hard to fix some of the problems that they have. All right, so let's just go over this real quick. Crap. Hold on a second, because I still have a lot of stuff I want to cover. Let's hold this for now. All right, guys, we'll hold this. We'll come back to this. Zordon, appreciate that, but I'm going to come back to this because I do want to cover it, but I'm already in the middle of covering the Treasury, or excuse me, covering the tariff stuff. Let me cover the tariff stuff, and then I'll come back to the YieldMax stuff. All right. So anyways, so Trump announces a new 10% global tariff after raging over Supreme Court loss, right? So he took to Truth Social and basically thumb mashed his Truth Social post. And, he also did a TV appearance and basically said that, we're getting laughed at, that this was a dumb ruling, et cetera, in perfect Trump fashion. So real quick, President Donald Trump said he signed executive order imposing a new 10% global tariff under Section 122 of the Trade Act of 1974. Trump was defiant following a major Supreme Court defeat, saying that he will find other ways to impose global tariffs that were struck down. Trump's remarks vacillated between defiant and scathing. He even went after Justices Neil Gorsuch and Amy Coney Barrett, whom he nominated after they voted with the majority of the 6-3 tariff ruling. All right, so I believe the 3 judges that did rule in favor of the tariffs, I believe 1 or 2 of them were appointed by Trump, or was it? Actually, no. This is who he had put in there. Yeah, but I think Kavanaugh was one of them. That was the person that Trump had helped put in there. But anyways, President Donald Trump on Friday evening said he signed an executive order imposing a new 10% global tariff hours after the Supreme Court struck down his sweeping reciprocal import duties in a major rebuke of his trade agenda. The Section 122 tariffs will take effect almost immediately, Trump said in a Truth Social post. All right, so again, nothing new here. Let's see if we can get this clip real fast.
Introducing the DP World.
Ooh, tomato. Let's see. Let's wait for these 10 seconds. And then we're gonna hop to this this other clip over here. All right. So appreciate everyone hanging in there.
Of the statutes, other of the tariff authorities, which have also been confirmed and are fully allowed. Therefore, effective immediately, all national security tariffs under Section 232 and existing Section 301 tariffs, they're existing, they're there, remain in place, fully in place, and in full force and effect. Today, I will sign an order to impose a 10% global tariff under Section 122 over and above our normal tariffs already being charged. And we're also initiating several Section 301 and other investigations to protect our country from unfair trading practices of other countries and companies. Thank you for your attention to this.
Thank you for your attention to this matter. Anyways, there we go. Trump is still on the warpath to get these tariffs implemented. So again, I don't think we've heard the last of these tariffs. Again, I don't want to bring politics into this channel. All right. Again, I always say this because I'm covering such a very emotional figure here for a lot of people. I don't care if you're Democrat, Republican, Independent, Green Party, Purple Party, MAGA woke. I could care less. All right. This is a politics free channel. We just cover politics because it does impact the stock market. All right. And again, especially if you look beyond that, not just domestic politics, but into geopolitics, that definitely has a huge impact on the stock market. All right. So anyways, just wanted to cover that piece. All right. I'm not, because when I show, Trump, sometimes, I'll get people, I'm sure people get the feeling like, oh, he's just a MAGA head. It's like that couldn't be farther from the truth. Anyways, moving on. All right. So we had breaking news. Again, this is regarding the tariff stuff. So let's listen in. This is from CNBC.
Supreme Court's decision to strike down his tariffs. Our Eamon Javers was in the room. And Eamon, I heard you this morning suggest that it was going to elicit a defiant response, and it did.
Yeah, it absolutely did, Mike. And I've got an important clarification here. I was just in the office of a White House official pinning down some details on this. And I don't think this information is in the market necessarily yet, so I want to walk through it. There's some question about this new 10% global tariff that the president announced in that briefing and who it would apply to. Because remember, as we went through the year last year, a number of countries and regions around the world came to trade agreements with the United States. A lot of those trade agreements set tariff rates that were higher than 10%. So what happens to those countries who already came to the table, already negotiated a trade agreement with the United States? Well, this White House official just confirming for me a short time ago that all of those agreements are now reset to 10% under this new tariff rate once it goes through. So the European Union, which was at 15%, now will be at 10. Japan was at 15%, now at 10. India was at 18, now at 10. South Korea was at 15, now at 10. And Vietnam will be the big winner here. They were at 20% under their trade agreement with the United States. They also come down to 10% under this new tariff.
Man, that was a huge win for all these other countries that had to deal with this, right? That's a huge win for them. Now that all their tariff rates basically dropped to a standard, baseline 10%. But again, the Trump administration is still going to push for a way to get them back to, what the previous agreements were. So again, I think this is going to create volatility for the stock market. All right, this is definitely going to create a lot of short-term noise until probably more information comes out about the direction of 122 that he's implementing. Right, so this is again it's just going to create a lot of nonsense. All right, so for investors out there, again, just keep your eyes open. This is not not a time to be freaking out, right? I don't think we're going to have a Liberation Day 2.0, 3.0, whatever you want to call it. I don't think this is going to be the catalyst that's going to send the S&P 500 down, 10, 15%. This is just going to create some short-term noise, right? I think the market's kind of already digested it. And moving into the weekend is going to give, the market even more time to digest it. So Monday, we'll see really how the market is going to react to all of this. Let's see. Hey Sergio, what's up, man? Hey, welcome. Hey, were you able to get into the community? Because I don't know if I saw you get in or not, but let me know if you're still having trouble during the stream. I'll make sure to just give you a link instead. Skeptic says, for your information, picked up 17+% year to date, or pick is up 17+% year to date. Lesser metals for the win. All right, awesome. Okay, so before we continue on with this, stream, let's go back to the YieldMax stuff. Okay, so we had a comment. Do you have an opinion on YieldMax announcing major changes to how YieldMax works? Okay, so the biggest change here, the biggest change to YieldMax is now they're going to include pretty much all the other funds that they didn't have in there, including the short ones, right? The short, like Winter or what is it, Fiat or whatever else. I don't follow all their funds, but I know they had like a crash, for Tesla. So they had a crash, a CRSH ETF for Tesla, which is basically shorting Tesla. So they have Winter, which is for MSTR. They had Fiat, which is a trade against Coinbase. So they had a couple different ones. So now they're going to include that into YieldMax, and it's going to give them a little more flexibility in how they manage YieldMax, and that should be good for not only the ETF performance, i.e. the share price, i.e. the NAV, but it should also be good for investors, because if you had just a fund of funds like we see with WPay, where we want it to only go up when we're in these markets where it just continuously goes down, that is very detrimental to the ETF, right? That's very detrimental to the performance. So by them including those ETFs in this, and they can selectively add and remove, that is good in my opinion. That's that is a good thing that they're doing. Don't get me wrong. They're also, so they did that, right? So right here, they can incorporate YieldMax short single stock ETFs over time. So this broadens the opportunity, adds more flexibility across market environments. And then they also enhance the construction, moving beyond purely equal weighted approach. YieldMax will introduce a positive momentum framework to help emphasize strategies that are showing stronger relative trends. So instead of having just like WPay, where everything was kind of equal weighted, now what they're going to do is implement some proprietary framework to choose the stocks or the ETFs with the most momentum. So let's say like Murni, I know Murni is like all over the place. Let's say it starts to have a hockey stick recovery, right? It's just going up. Moderna, the stock is going up, so Murni is going up, right? They could assign that a higher weighting within the ETF, which again could prove to be good for YieldMax. It should or could potentially help the performance or the NAV of YieldMax. So again, I think these strategies are good. I think it's smart that what YieldMax is trying to do. They're trying to basically get people back into YieldMax. And again, these funds, these ETFs, they're going to continue evolving over time. They're going to continue adding new strategies, et cetera, blah, blah, blah. I think this is a step in the right direction for a fund of funds like this. So this, it adds a lot of flexibility when you think about it, because now they're not just in cover call ETFs equal weighted across the board, where you only want it to go up and to the right. Now they have the short positions, and now they can do either a proprietary momentum framework, put assign specialty weightings to ETFs that have more momentum over the other ones. So that could be good in my opinion, but we will see what happens. All right. Let's see. So Lexus dude also says they can also drop the funds that are lagging. Yeah, that's true, right? So they can also take out some of the funds. I like that about WPay, is that they're going to basically only include the single stock ETFs that are within the top 25 of the S&P 500. I think, and they're going to do a market cap weighted approach and no more equal weighting, which I think is a huge deal. And I think that's absolutely a positive development, and it's going to be a positive, momentum in the right direction, right? So we'll see how that all comes about. They can also drop the 1.28 expense ratio. Absolutely, Otis. You're absolutely right about that. That's what they should do. Damn. Don't get sick, guys. Never get sick. Anyways, those are my thoughts on this, right? On this big YieldMax change. I do think it is good. I do think it's positive, but I think, and this is just my perspective, I think they burned so many investors, and they continue to do this rodeo show, this circuit, where they'll go out, they'll do a bunch of interviews, and they're trying to win back a lot of the investors that got, either one, scared out, or two, lost a bunch of money, lost a bunch of principal, NAV erosion, blah blah blah, and three, they're trying to change the image, right? I think that's really what they're ultimately trying to do, because they lost a lot of AUM, assets under management, right? Investor money. They lost a lot of AUM over the last couple of months. And again, this market, the way it is, this volatile market, is really, really shaking out a lot of these ETFs and destroying a lot of these ETFs, right? The strategies that work in a bull market don't work in a downward or a choppy sideways market, right? So we're all finding that out as time goes on. And most of the single stock ETFs, right? This is, across the board. It doesn't matter. The PLTWs, the NVDWs, the Nvidia, right? HOOY or MSTY or MSTW, doesn't matter, right? Roundhill, YieldMax, Granite shares, I don't care. Pick your poison, right? I think a lot more investors are starting to realize that the index-based or broad-based or basket or fund of funds ETFs are probably a little more, safer, right? And I use that with quotations, right? They're a little more safer. We'll see how time, how this rest of this year plays out. But that's what I'm seeing. Just again, this is my own comments, but that's what I'm seeing. More people are flocking to the baskets instead of the single stock stuff. This is why Curve Neos is doing really, really well, right? They have baskets of ETFs, right? Or ETFs that are baskets. You have Neos, they have SPY-I, QQQI, which are the index based. They have MLPI, they have IYRI, which is, again, just a basket. Even YieldMax's Chippy, which has been getting all of the love recently, it's been doing well. But again, I think investors, they have the starry eye, just like they did with everything else, right? They're only seeing it go up and to the right. It's still paying out a really nice distribution. They say, oh, well, Chippy's been doing well. It's the best ETF, blah, blah, blah. Well, if the semiconductor space has a free fall or something, which I don't think it will personally, because the demand for semiconductors is still extremely large. But let's say there was to happen a huge sell-off in SMH or SOX or whatever. What do you think that's going to do for Chippy, right? On top of paying a weekly distribution. And then if it's a grind back up, right? Let's say it's a steady grind down and then a grind back up, right? You're going to have capped upside, right? That is what Chippy is. It's a vanilla cover call ETF. So you're going to have that problem, right? You're only going to get like half of the upside. Meanwhile, they're distributing all that. But on the way down, they're still making those distributions, thereby increasing, the NAV erosion, right? Because they're trading down, and every time they pay out a distribution, which is every week, it's dropping the ETF a little bit more. So again, I think Chippy is great. I think the semiconductor space is awesome. I have no problems with Chippy or the semiconductor sector. I'm very bullish on the semiconductor space, as you guys know. But Chippy's just in that sunlight right now. At some point, there could be a turn, right? There could be a severe market drop, for SMH or for SOX or SOXQ, whatever. There could be that big drop, and we will see Chippy drop along with it. And then, of course, that's when investor sentiment will turn around. People will say, "Oh, Chippy sucks. Chippy's garbage. I don't like Chippy anymore. I'm selling out of this trash," right? And then ad nauseum, everyone moves into a new ETF, right? A new flavor of the month. So those are my thoughts, guys. Again, every time I talk about high yield stuff, I start to go on a rant. But anyways, let's get back to the news, guys. All right. So this is GDP that just came out. These numbers, I'm sure some of you guys already are aware of this, but I want to cover this. All right. So this is GDP. We came in actually lower than expected. And the Trump administration, Trump already went on Truth Social and said, well, it's because we had a government shutdown. That's why these numbers are so bad. So let's listen in.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ on this important Friday with some key breaking news. Personal income and spending for December, including some of the Fed's favorite metrics. First look at fourth quarter GDP, and the numbers should be populating. We're going into this with yields moving lower. And on the GDP side, a big disappointment. We're looking for a number around the 2.8 area, comes in at 1.4. 1.4. 1.4 would be the lowest GDP since the first quarter of 25 when it was negative, slightly negative, around 0.5%. Now, if we look at consumption, comes in as expected, 2.4, but that's about a full percent less than the sequential look at the final read last quarter. 2.4 would be the lowest since also the first quarter of 25 when it was 0.6. If we look at the pricing index, not good news here. 3.6. We were looking for 2.8. 3.6 is 0.2 lower sequentially, but much higher than expectations. 3.6 would equal where we were in the first quarter. We got down to 2.1 in the second quarter of 25. Of course, last quarter is higher at 3.8. Finally, if we look at the PCE core pricing index, 2.7, one tick hotter than expected, 2 ticks cooler than the rear view mirror, which was 2.9. Personal income up 0.3, exactly as expected. And last look, it's upgraded to 0.4. On the spending side, looking pretty sharp here, up 0.4. And last look, downgraded from 0.5% to also up 0.4. That 0.4, by the way, is 1/10 better than expectations. Now, if we look at real spending, accounting for inflation, it was up 1/10 as expected, but that's 0.2 light to history. It equals September. To find a lower number, you're going back to May of last year when it was slightly negative. Now, let's get into the meat on the bone. PCE pricing index month over month is 0.4%, 1/10 hotter than we were looking for, and it's double the rear view mirror at 0.2. 0.4, well, that would equal February of 25. To find a higher number, you're going all the way back to January of 24 when it was up 0.5%. Now let's look at the longer look year over year. Comes in at 3% on year over year PCE, and I'm sorry, year over year, PCE is 2.9. Excuse me, 2.9. If we look at month over month core, up 0.4, like I talked about, and year over year, up 3%. And 3% would be the highest level going back to April of last year. So if we look at these numbers and take them all in stride, I think the market did a good job of divining. And I would have to say that many, including Steve Leisman, thought this number would be hotter than expected on the PCE front. And indeed it is. But if we look towards history, we have made a little bit of progress on some of the numbers on the GDP side, but not much progress on this side of the equation. On the week, well, where were 2 years last Friday? Last Friday, a 2-year close at 341, Joe. That was the lowest yield close going back to SEP of 22. Right now, it's hovering at 346. And if we look at the 10-year,
There I go again, talking with the mic on mute. Okay, so basically what he's saying, and he was throwing a bunch of numbers out there. It was kind of hard to even keep up with them. But basically with GDP, all right, it is only up 1.4%, and GDP, gross domestic product, is kind of a measurement, of the growth of the U.S. economy. Okay, and the report came out that it's only up 1.4%, but again, Trump already got ahead of that and posted something on Truth Social, basically saying that the reason why it's so low is because of the government shutdown that occurred. All right. Again, some of these numbers have been coming out, and a lot of people, a lot of analysts, pundits, et cetera, have been, saying that these numbers are fake or not real. We were on a pretty good trajectory for, at least a 4%, for GDP, but again, this one came down much, much lower. So let me just real quick, let's see, GDP, US GDP. for 2025. Let's see what those look like. Yeah, so the real GDP for the United States, according to the BEA, increased 2.2% in 2025. All right, and from the 2024 annual level to the 2025 annual level, compared with an increase of 2.8% in 2024. So right now we're at 1.4%, but again, that's just for the quarter, if I'm not mistaken. Yeah, it's just for the quarter. All right, so gold had a nice rebound. All right, and this was on the whole thing of what was happening, not only again in the Middle East, because the Trump administration is again threatening to strike Iran, but we also had the tariff debacle, and that's also what lent itself to uncertainty, monetary policy, et cetera, economy, yada, yada, yada. And that's what is sending gold up a little bit more. Okay, so gold and silver futures closed higher Friday after the U.S. Supreme Court struck down most of President Trump's tariffs, which was followed by a president's announcement of a global 10% tariff for 150 days to replace some of his emergency duties. Analysts said the uncertainty around the next steps the Trump administration could take could support precious metal prices. All right, I'm assuming that's what they meant, because this sentence does not make any sense. All right, but gold and silver were already showing strong gains early Friday morning, following weaker than expected data on U.S. economic growth, with GDP slowing sharply to a 1.4% annualized rate in Q4, well below economists' forecast of 3%. All right, as the government shutdown and softer consumer spending slowed activity. Meanwhile, the U.S. personal consumption expenditure, PCE index, a key inflation metric watched closely by the Federal Reserve, rose about 40 basis points in December, above expectations for a 0.3% increase. All right, so again, the Federal Reserve's keeping an eye on inflation, where we're at. I went over this yesterday. You have backward reading metrics, which is the reports that come out, from the BLS or the BEA. But you also have something like trueflation, right? If you want to get kind of a more in the moment, a picture of what inflation is looking like, right? So again, what to believe? I have no idea what to believe, but I do lean probably more on the trueflation side of the equation, only because I like the way they gather their data versus government numbers. And we've already seen where government numbers came in, and they came in very questionable. All right. So the data shows inflation is still present in the marketplace, but with GDP coming in lower, it suggests the economy is not close to a turning point. RJO Futures market strategist Bob Habercorn said in a note, there is still many unknowns and uncertainties around the U.S. economy, and that is supportive for gold. All right, so that is your bull case for gold there. Of course, the Fed is still looking at jobs reports. That is a big deal. Again, cracks in the labor market would warrant further rate cuts. Nobody thinks we're getting rate cuts as long as Jerome Powell's still in the seat. So you're still looking at about a May, June timeframe of when we could probably start hearing about future rate cuts. All right, so wanted to cover that piece of news. This is huge right here, guys, especially if you're in the IT field. So if you're in the IT field, just know that either keep your certification sharp or keep your skill set sharp, one or the other, right? Cybersecurity stocks fall after Anthropic unveils Claude Code security. All right, this is a huge deal. Anthropic unveiled a new feature called Claude Code security built into Claude Code on the web. Anthropic noted that the new feature scans code bases for security vulnerabilities and suggests targeted software patches for human review, allowing teams to find and fix security issues that traditional methods often miss. All right, so back in the day, we used to have these scanning tools that would scan the network, right? And it would look for like open ports. It would look for this, look for that, look for computers with missing software updates, and it would just print out a nice report, right? But now you have Claude, an artificial intelligence able to do something similar to that, right? But it's doing code bases. It's not doing, scanning the network or anything like that. But it is able to scan code bases for vulnerabilities. So software, right? Which, if you're a security software developer or a software developer that handles the security for software, your job could potentially be up, for AI, right? It could be up for AI replacement. That is again, the software technology market is taking a huge hit from artificial intelligence. It's not just the warehouse workers, logistics, potentially trucking, the industry could be impacted, or taxi drivers or Uber, whatever. This AI is impacting everything, every sector across the board. Okay. The company added that it recently showed that Claude can detect new high severity vulnerabilities, but the same capabilities that help defenders fix and find vulnerabilities could help attackers exploit them. The company added. So now you can use Claude to basically attack as well, which is, again, absolutely wild. Anthropic, which is backed by Amazon and Alphabet's Google, said Claude Code security is intended to put this power in the hands of defenders and protect code against this new category of AI-enabled attack. 1 second, guys. Okay, appreciate that. So just to give you guys an idea of what these cybersecurity professionals need, okay, this is pretty much standard across the board. This is 2026 industry projections for cybersecurity, for the cybersecurity field. You're going to be roughly paying $79,000 to $90,000 for entry-level cybersecurity professionals, and as high as $200,000 to $400,000 plus. Now, in my own personal experience, I worked with cybersecurity professionals, and they were pumping around $150K to well over 350, and that was in the DoD sector. Okay, that was in the private DoD sector, contracting as well. Okay, contracting for the government, and that's not just overseas. That's stateside as well. Okay, that's within the United States, in Washington D.C. That area. Cybersecurity professionals get paid a lot of money. But what if you could start replacing them with something like an artificial intelligence, right? Look how much certifications it takes just for a cybersecurity professional, right? I've held a couple of these credentials myself. These are not cheap. And not only that, the amount of experience you need and the amount of, on-the-job training you need for this stuff is a lot. It's not something you just read a book and then you're all of a sudden a cybersecurity professional. There's a lot of on-the-job training, a lot of experience that comes with this stuff. And they can get replaced with something like this, something like an Anthropic Claude bot, right? Claude cybersecurity. So as we talk more about, job layoffs, the impacts of AI, and how they can come into basically all sectors and start replacing people, this is one of them, right? This is just another case study, another use case for AI. Because imagine there's departments, there's whole organizations. You have the NSA, a government agency that is nothing but cybersecurity professionals. You could remove departments. You could remove almost entire departments and replace them with artificial intelligence. Of course, that's a little extreme, right? That is extreme. You still need the human touch. You still need, human, thought and decision-making processes. But, to have at least, AI take a brunt of that workload off, find vulnerabilities in software systems and networks, that is going to put out a lot of people out of work, in my opinion. So this is just more further proof of artificial intelligence, starting to get its little fingers into everything else, right? All right, so we're going to cover this real fast. Nvidia and OpenAI abandoned unfinished $100 billion deal in favor of a $30 billion investment. I showed you guys a clip a couple weeks ago of Jensen Huang, kind of talking and walking back his, $100 billion investment into OpenAI. Basically, he was saying, I never promised 100 billion. I said we every time they do a funding round, we would take a look at the funding round. But now it looks like they're only doing a $30 billion investment versus the $100 billion. All right. So U.S. chip giant Nvidia is close to finalizing a $30 billion investment into OpenAI that will replace the long-term $100 billion commitment agreed upon by the companies last year. The $30 billion equity investment is part of a funding round that is on track to raise more than $100 billion and will value OpenAI at $730 billion, not including the new money. The report said OpenAI will invest much of the new capital in Nvidia hardware. All right. I talked about this last time. All right. I talked about how SoftBank, sold all of their Nvidia stake and gave it to OpenAI. And what did OpenAI do? Went and bought Nvidia chips. Okay. So Nvidia, in my opinion, is like the no-brainer in all of this, and this is why I still hold my NVDW position. Right, I don't have Nvidia common stock. I just have the round hill version of that. But this is, in my opinion, just Nvidia is a no-brainer. Like, you can't have artificial intelligence without the biggest player in the room, and that, in my opinion, again, is Nvidia. So this is just, it's comical, you know, when people talk about the circular financing. This is exactly an example of that. All right, the deal could be finalized as early as this weekend. The report added. All right, so we got to see a quick interview with Sam Altman, which we're going to go over here in just a second. Actually, let me play it right now. All right, cool. So I wanted to make sure the ad wasn't going to play. So OpenAI reset spending expectations. This one is kind of a little iffy, right? And what I mean is, OpenAI has been projecting that, you know, this AI market is going to be like, spending is going to be like 1.4 trillion, right, over the next couple of years up until about 2030, right? That was the message all of last year, that spending was going to be up there. And now it looks like he's starting to dial it back. Maybe, you know, he was projecting a lot of numbers, you know, to rally up, investors and get everyone shiny eyed. But now it looks like reality may start, coming in. Because he slashed those projections by more than half. Okay. After previously boasting a $1.4 trillion in infrastructure commitment, OpenAI is now telling investors that it only plans to spend $600 billion by 2030. All right. So again, you're looking at the derivatives under this. You're looking at the semiconductors. You're looking at the memory chip makers. You're looking at the data centers, right? You're looking at everything that goes into a data center. You're looking at the Ciscos. You're looking at the, Junipers. You're looking at the copper, which we're going to cover here in just a moment. But you're looking at the copper that's needed, the fiber optics. You're looking at all that stuff, right? And how does this impact them? Right? How's this going to impact the data center capex? You still have $600 billion. Don't forget, you still have $600 billion coming from the major hyperscalers that are just pouring money into data centers. So just because OpenAI is reducing their number doesn't mean that data center capex or AI spend is going away. I don't believe that one bit. The AI company has faced mounting concerns about whether it can even generate enough revenue to cover its costs, which we're going to cover here in just a moment. OpenAI is now targeting about $280 billion in revenue in 2030 after reeling in $13 billion. Okay. That is just obscene. All right. OpenAI is telling investors that it's now targeting roughly $600 billion in total compute spend by 2030. All right. Compute spend is the data center stuff. All right. Months after CEO Sam Altman touted a $1.4 trillion in infrastructure commitment, the artificial intelligence company is providing a lower number and more defined timeline for its planned spending. Sources told CNBC as broader concerns mounted that expansion ambitions were too great for the potential revenue that would follow. So having all these data centers built out, building all these data centers, and then not having the demand, right? That's what people are worried about, right? Build it and they will come. That is kind of the quote that a lot of people are saying, for data centers. But what happens if they don't come, right? What happens if the demand for data centers is not really all there, right? That is the biggest worry right now. I still think that it is there. I mean, we just covered how AI could potentially reduce a whole entire sector's workforce. There's going to be more and more demand as artificial intelligence, and these are just my thoughts. As artificial intelligence continues to mature and evolve, you're going to have physical AI, right? You're going to have robotics. You're going to have AI factories. You're going to have general AI for everyday use, right? For everyday, just talking on a phone, right? We already see that in WhatsApp. Like WhatsApp, you can use AI, right? We see that in Meta. We see that in Copilot, Microsoft Office 365, Microsoft Windows. We see that Google Gemini. Like nobody even searches. Like nobody goes to Google and like clicks on links anymore. Like I'm just talking out loud. I'm talking out of my butt. But my personal experience is whenever I go to Google, I go straight to AI mode now. I don't even unless I'm doing the streams and like looking for specific information or fact checking information. I'm not even pulling up the 10 blue links anymore, right? The 10 top search results. I'm just going straight to AI mode and then just reading whatever AI mode is, right? And people will say, oh, well, you're not really, you're not really thinking for yourself. You're letting the AI think for yourself. Well, let's be honest, AI is pretty damn accurate. All right. Let's just be honest here. But that's when you start fact checking a lot of the data. And, back then, a couple of years ago, the data from these artificial intelligence or these language learning models was pretty inaccurate. You'd have to double check it, right? You were forced to double check this stuff. But now it's getting so much better. The data is becoming more accurate. So just my thoughts on that. All right. OpenAI is projecting that its total revenue for 2030 will be more than $280 billion, with nearly equal contributions from its consumer and enterprise businesses. That's what they're projecting. Okay. They only made $13 billion. All right. OpenAI is finalizing a massive funding round that could total more than $100 billion, with about 90% coming from strategic investors. One person said Nvidia is in discussion to invest up to $30 billion with OpenAI as part of the round that could value the company at $730 billion pre-money valuations. Don't forget that OpenAI is still trying to IPO probably later this year or maybe next year. Right. If they were to, if they were to IPO, what does that valuation look like, right? How much of a premium are you going to be paying for each share of OpenAI? And don't forget that there's still going to be a lot of investor money tied up in OpenAI pre-IPO that are going to want to get out. So be careful when you get into OpenAI. I mean, are they going to be worth, if they're at $1 trillion valuation, let's just say, right? Like SpaceX, potentially could be at that $1 trillion valuation if people, believe in that whole thesis of data centers in space, et cetera. But what does that command for a share price? Are you willing to pay, a premium for that? In addition to Nvidia, strategic investors in the funding include SoftBank and Amazon. OpenAI generated $13.1 billion in revenue in 2025. The sources said up from its $10 billion target. So you got a $3 billion difference there, or delta. The company burned through $8 billion, lower than its $9 billion target, which is obviously a good thing. All right. So a company making $13 billion and they expect to make $280 billion by 2030. I don't know, guys. I don't know about that. We'll see, right? Because the demand for AI is still very strong. But I don't know. These numbers are just crazy. I personally have no idea. I don't think I would buy OpenAI's IPO. I really don't think so. Not for me personally. Okay. Let's see. We're at minute 52. All right. Let's check some charts here, or some chats. The truth is that the cyber person went into an orchestrator role versus doing the repetitive work, more of a co-pilot, which is good. That's also true. So when he's, what Sergio is talking about as far as like an orchestrator is a person that's, managing kind of all the softwares or dealing with the orchestration of, cybersecurity or software security, right? Versus doing the manual work, which is, implementing or running the scan, checking the scan, clicking this button, clicking that button, installing a software patch or plugging a vulnerability, et cetera. And that is probably where we're all headed eventually. A lot of roles are headed is the orchestration piece, right? You just need one person that's versatile that can run these AIs to do the button clicking, right? So you're going to be operating at more of like a managerial or like a team lead or even a director level. Most cyber folks get burned out from repetitive work, which is what the AI can do for those professionals. That is 100% fact. I got burned out myself from doing IT work. I mean, IT work is brutal. It's a very thankless job. And when you're dealing with people who are pissed off that their computers don't work, I mean, they're not calling you to say, how's your day, right? They're calling you because they're pissed off. So fun fact, you know what? I won't even get into that. All right, let's listen to Sam Altman. So this was an interview with him on CNBC. So I just wanted to listen in and hear what he has to say. I actually have not even watched this clip yet.
Been incredible to watch. And it's not just ChatGPT. Codex is the fastest growing codex market in the world now too. But the energy here and what people are building is remarkable.
Right. And in terms of the potential of this market, I know you've got the Go plan here, a low cost plan. How do you plan to sort of monetize people in this market as well as you continue to expand here?
Go is one thing that we really designed with India in mind as a market that clearly needed it. And the enterprise adoption, I think, will be another very strong angle.
In terms of the infrastructure front, you have this partnership with Tata as well on the data center. Also wanted to get your take on what the plans are for Stargate in the India market. When is that happening? I think we had the IT minister this week speaking, saying it's happening. Can you give us some updates on that?
We are working as hard and as fast as we can to build sufficient AI infrastructure in India to serve the market here. It's going pretty well. I don't know the exact timelines on every project, but the country here is motivated to build fast.
Do you think we'll get something this year?
I hope so.
Sam, on terms of AI competition, we know it's intense. There's a ton of players and there's a lot of competition on the frontier at this point. Last year, you issued this code red around the competition. Do you feel you're in a much better place now than you were, say, back in last year?
Yeah, ChatGPT has been growing very strongly. And I feel great about the current models, the upcoming models. It's been very fun to see the momentum with Codex as a new product. Like ChatGPT is great, but always expected that to do well. The strength of Codex winning the coding market has been a new and really fun thing to watch.
And in the enterprise specifically, I mean, you go up there against Anthropic, for example. The competition. Are you managing to gain customers? Co-work. There was a big deal made out of that.
Yeah.
And the impact it's having.
I think most of the enterprise momentum right now is still honestly around coding, but I hope and expect that over this coming year, we'll start to see it for knowledge work more generally.
When you start to think about revenue as well, Sam, ads, this is a new area. You've only just started them. What has been the initial feedback so far?
So it's super early, and I always hesitate to talk when something's this early, but anecdotally, the feedback has been pretty positive. I think we still have some work to do to figure out the exact ad format that's going to work the best, but people are like, oh, this is like, a cool thing. The ads that I have personally liked the most in recent years from tech have been sort of Instagram style ads, where you discover something new that you might really like and otherwise wouldn't have known about. I think we've got a real opportunity to push in that direction with ads and ChatGPT.
When you say there's some stuff to figure out, what are the things that you hope to make improvements on?
Oh, we're still just like testing very different.
So their big thing is ads in ChatGPT. He likes the way Instagram does their ads. So he's like, oh, why not do ads in ChatGPT? Man, I think that's going to piss off a lot of people. Well, maybe not so much the people who use ChatGPT for free, have a free tier account. This would just be added revenue into OpenAI for them to explore that. But definitely as a pro user or even a plus user, someone who's actually paying for the product, if I see ads in my freaking AI terminal, I'm hopping out. Like, I don't want to see ads. But I wanted to point that out. He also brought up, the Stargate project. Very big deal. Again, they're building a Stargate data center. They completed a Stargate. Let me take that back. They are completing a Stargate data center in Abilene, Texas, if I'm not mistaken. I don't know if it's completed yet. So they have a data center there. They building a data center in Europe as well. And now he's talking about one in India, which is a huge deal for the Stargate project for OpenAI. Okay, because the Stargate project was a very ambitious project when it first started. And I think this was really the Trump administration way of getting ahead of this AI agenda for the United States, right? Because we're in an arms race, whether you want to believe it or not, with a competing rival, which is China. And China's AI models are getting better every single day. You want the whole big thing behind the Stargate project is that they want to put the world on the American stack. All right. American semiconductors, American technology, American software stack, American artificial intelligence, LLMs, everything on the American stack. Right. But you have sovereign AI that, is coming about, especially in Europe. Europe wants to develop their own language learning model. Right. They're actually building out their own data centers as well, aside from the Stargate project. So a lot of interesting stuff again with data centers. And in my mind, whenever I think about these data centers, I'm thinking about Nvidia, because you're going to need Nvidia chips. Is this also accretive for someone like an AMD? Absolutely. Is this accretive for these other chip manufacturers that are coming out? You have Cerebras, if I'm not mistaken, which is an Nvidia competitor, but they're not public. You also have Google TPUs. Is that good for Google? Absolutely. Right. I think this is all good stuff. And this just lends more to the story of data center CapEx, at least into the future. But again, in my mind, the key player is going to be Nvidia in a lot of this.
Formats, where and how should an ad show up? like that kind of tactical stuff.
Is it something, I know it's super early stage, but how much are you thinking about taking this to other markets outside the US?
Eventually we want to, but I don't know any kind of timeline there.
Another big potential new revenue driver in the future for you, Sam, is around hardware. Now you've got Johnny Ive on the team. Is there anything you can tease out at this point around what you're working on?
One of the powerful things about AI is how much context it can handle. And an AI that, and we see a little bit of this with OpenAI, an AI that can get to know more and more about you can give you better and better products and services. And we'd like to build a hardware that can do that very well in the virtual and the physical world.
Not a smartphone. The other part of the hardware equation as well is semiconductors is an incredibly important part of the data center, incredibly important part of what you do in terms of training and inference, etc. Semiconductors is an area I believe you are investing in and trying to figure out your own kind of product. What does that look like now? Is this going to be something you can train on as well as inference?
We will have a rich portfolio of semiconductor approaches. We will partner with the sort of giants of the field like Nvidia. We'll partner with newer startups in areas like fast inference, like Cerebras. We'll do our own inference chip as well. We expect this to need more of a portfolio of solutions than maybe we initially thought, but we're very excited with our own work here.
So we're not talking just one kind of processor like Google's gone with the TPU. We're talking potentially a multiple portfolio of semiconductors out of OpenAI.
Yeah, I mean, Google has the TPU. They also buy Nvidia chips and I believe some others too. And I think you should expect the same from us.
Financing has been a big focus. I know you're currently undergoing potentially more than $100 billion round at this point. Are you close to closing that?
If I were, as you know, like legally, I would not be allowed to talk about that.
Just in terms of financing, though, there has been a lot of concern about the way artificial intelligence has been being financed. Terms like circular financing have been thrown around, vendor financing as well, given the fact that you buy chips from Nvidia, invested in you as well. There is also concern that if there is a failure at some point in this chain, this could have knock-on effects on companies like OpenAI. So are you concerned about that?
I don't.
Before we even listen to this, all right, pay attention to this. This has to be good. I haven't even watched this clip, but I think this is going to be a very, very important piece. This is coming from Sam Altman, CEO of OpenAI. There's been all this talk about circular financing. All right, so pay attention to what he says.
I don't agree with the first part of the concern. I do agree with the second part. New revenue has got to come into this system. Like, people can invest in each other and buy each other's stuff, whatever. But if there's not new revenue coming in, that's when you get into there's like nothing here. But revenue is growing so fast, not just for us, but the whole ecosystem, that there's like a massive amount of revenue coming in to support all of this infrastructure. So I don't worry about that part. In terms of any one layer of the stack failing would cause some real knock-on effects, and it's sort of like a very tight supply chain right now. I do worry about that.
In terms of not being able to get access to certain technologies, i.e. chips?
Yeah, something like that.
Yeah.
So his biggest worry is not getting enough chips, right? Not getting enough semiconductors. He's fine with circular financing. He doesn't think it's a problem. And we already know that he doesn't think it's a problem because we've already seen him giving Nvidia large sums of cash in order to, keep this train moving. So I'm still pretty bullish on Nvidia. I'm still pretty bullish on this whole AI, this whole AI trade. So let's keep listening in, guys.
The other part of their concerns, some have criticized the valuation OpenAI has got and said, well, there's intense competition. We've seen things like the DeepSeek moment can disrupt markets as well. Your valuation, do you think it's justified?
I think so.
The revenue,
that's up to a market to decide, but I think so.
And the path to profitability eventually, what does that look like for OpenAI?
We are growing at an extremely fast rate. Right now, I think as long as we can have reasonable unit economics, we should focus on continuing to grow faster and faster. And we'll get profitable when we think it makes sense.
Sam, just a very quick final on China. We had an analyst on CNBC the other day saying that China tech shock is just getting started, that in 5 to 10 years' time, most of the world could be running on the China tech stack. Demis Hassabis was speaking to me very recently saying China is just months behind in terms of its ability to bring out models. Just in the last 2 weeks, we've seen a ton of interesting models out of China on video, on physical AI. Are Chinese companies' progress being underestimated right now? Do you feel they're that close, as Demis says?
I don't know about being underestimated, but certainly the progress of Chinese tech companies across the entire stack, and also not just in AI, but in many fields, is remarkable. The reason I'm pushing back on underestimated is it feels like every conversation I have is like, oh, China's beating us. What do we do about it? So I think people are aware of what's happening there. But yes, Chinese progress is amazingly fast.
Chinese progress is amazingly fast, right? So at least for my own personal thesis, for AI, the AI trade, AI companies, and like Nvidia, semiconductors, the semiconductor space, et cetera. One of my core theses of why I don't invest in China is because they they copy a lot, right? They don't innovate, they copy innovation, and that's a product of their government and the way it works, right? It's very government led. You have a lot of government intervention. You have a lot of red tape over there. Whereas here, in the United States, it's a free open market, right? But it has not felt that way. It doesn't feel like that way, especially when all these companies are getting incentivized by the government to do things. And, the government's now taking stakes in companies, right? That is a cause for concern. But, again, one of my core theses is that, American companies are gonna dominate this market. We have the best technology. These companies are all profitable, et cetera, et cetera, et cetera. You also had, Chinese semiconductor companies that they can't produce chips like Nvidia can, right? But that doesn't mean that they can't catch up either. So and listening to Sam Altman and what he's saying about the Chinese market, and I've seen some of the videos, like I still think like BYD is probably better than Tesla, right? By multiple metrics, or me personally, just getting in some of these electric cars out here. Like you have Chery, you have BYD, you have Jayco or Jaku. You have a bunch of these, Chinese made electric vehicles, and they are phenomenal. They are nice, right? Real nice. And I would look at the price tag, and the price tag is like a 30,000 USD, right? 30,000 American dollars. And I'm like, why would I even want a Tesla at that point when I can get a fully loaded, all options included in a Chinese, vehicle? So I do, believe that in some regards, the Chinese, AI market or semiconductor market is catching up. Is that bearish for companies like Nvidia, companies like Google, or these language learning model companies that will be IPOing in the future? Because when that DeepSeek thing happened last year, early 2025, again, everything sold off. Everyone's like, oh, this is the end. But then, as kind of the dust settled, it was found out that no, they actually did not just spend, what was it, $12 million building a language learning model, whereas, a lot of these American companies were spending billions. No, they actually spent way more, and they still have an over reliance on Nvidia, right? So but we see, videos like C Dance or C Dance 2.0, where these clips are almost like they have the real actors in them. You can see them all over X, but I wish I had a clip lined up for you guys. But we see that, artificial intelligence, at least in China, is becoming crazy good. So is that going to be a huge problem for these American AI companies? Could they end up losing their status as the dominant players in the space? This is going to be an interesting couple of years. I don't even know how to play it, right? I know we had, and I keep mentioning it, but we had the working investor here on chat, and he was explaining in a previous stream that the international markets are looking really good, and a lot of money is flooding into international markets. But me personally, my own thesis is I don't want to bet against America. I'm always going to bet on America, and that's why I'm going to put my money where my mouth is and invest in American companies. I just don't want to invest in overseas companies, especially overseas technology companies. But they do look, you have OpenAI CEO, who pretty prominent, figurehead in the space, saying that, he is pretty impressed with China's progress. So this is just going to only raise the stakes for pretty much all of the language learning model companies, right, to step it up and compete. And not only that, they're also competing with each other here, right? OpenAI is competing with Anthropic. I was trying to look for the picture, but you had Anthropic and OpenAI. You had both the CEOs on stage, and they refused to hold hands, right? I was trying to find the picture, but they refused to hold hands. And it was just really, really awkward. Like, damn, I want to find that picture because it was hilarious. Yeah, I don't think I'm gonna be able to find it. I posted it in the community. I cannot find it. Maybe I didn't even post it at all. But yeah, you had you had them just like holding their fists like this. Like this is like they weren't holding hands like everybody else. It was hilarious. All right, let's move on from this, guys. All right, so big news here. I didn't even realize how I missed this, but this is absolutely huge news when we're talking about commodities, when we're talking about copper, okay? When we're talking about copper and the AI data center demand for copper, okay? So Rio Tinto is a copper mining company, and they're going to, and this came out last month, right? So I don't believe I covered this. I'm pretty sure I missed this, but Rio Tinto to supply copper to Amazon for AI data centers. This is absolutely gigantic news, especially when we're talking about, you know, these metals and which one's going to be, right, the next silver, right? Because everyone's looking for the next silver. And of all the metals out there, copper is the one that's coming up the most, okay? So, you know, for me personally, I do hold a position in copper miners. I don't hold it in the spot price copper itself, but I do, you know, I still think, you know, copper is going to have a run. I don't know if it's going to have the 100% run or, you know, the 50% run. It's going to be choppy. You got to really, like, if you're getting into these metals, you got to have conviction, because the ride is absolutely wild. Like, I am down heavy on my UAMI position, and I'm down heavy on my USAR position. But again, the story still checks out. The fundamentals are still there, right? Nothing has changed with these companies. All right. So anyways, Rio Tinto said on Thursday it would supply copper that it leaches from an Arizona mine to Amazon.com for use in the tech giant's artificial intelligence data centers. The move underscores the rampant push by the AI industry for access to supplies of copper and other critical minerals that are used to build wiring, cables, circuit boards, and other electronic parts. We've said it 100 times on this channel, how important that copper is going to be, or these other metals, silver, for example, right, are going to be for data center and data center builds out, right? And then you look at step below that, and then what's going to be powering all of this, right? What companies are going to be providing the power to power these massive data centers? All right, AI sector growth is expected to boost global copper demand 50% by 2040, although analysts have warned supplies could fall short, sparking a rush to ensure access. This is not new. Samson has also done the same thing with a silver mine. Okay, so there's a silver miner out there. I don't have the name handy, but there is a silver miner out there that's selling silver exclusively to Samson, right? Because Samson is developing the solid state battery, and it needs a lot of silver for that. All right. Under the 2-year agreement, companies that build parts for Amazon Web Services will use copper produced by Rio's Newton leaching program from a mine owned by Gunnison Copper. So JP Morgan came out with a white paper, probably a really short white paper last year, all right, November 28th, 2025. It was titled, "Copper Prices Could Soar Further Amid a Tightening Market." There's not enough copper to go around. There is a copper demand, just like silver, right? There's not enough silver to go around, and there is a huge demand for this stuff. All right, so look, excuse me, guys. So looking ahead, JP Morgan Global Research expects the rally to continue, with copper prices reaching 12,500 a metric ton in the second quarter of 2026, ultimately averaging $12,000 $12,000 a metric ton for the full year. Data center demand growth remains an upside risk to these forecasts. The continued surge in demand for compute remains extremely topical for copper markets, even if the overall demand from the sector is growing from a small base. This could translate into about 475 kilo metric tons of copper demand in data center installations in 2026. That's up by 110 kilometric tons versus this year, Shearer noted. All right, so 475, that's 475,000 or 100,000, I should say. So keep that in mind. And the rest of this white paper, and you guys can check it out yourself. Basically, it's talking about copper, the demand for copper, the supply risk, And they even mentioned, I believe, China in here as well. So again, you know, if you guys are wondering why a company like Curve is getting ahead of the curve, no pun intended, you know, and introducing K-COP, right? That's going to be the next metal for sure. That's going to be the next metal. So you're going to have gold, silver, and copper, right? These are the metal plays, at least in my mind, that I'm playing for 2026. Now, I will say that my gold miners position, silver miners position is fairly larger than my copper position. The copper position is more or less probably going to be a short-term, you know, swing trade for me. And I'll probably consolidate a couple other things, but yeah, that's what's going on here. And again, you guys can check out, there's a couple of ETFs out there. If you're interested in this, there's, I think, CopX from Global X. Let me just double check. I don't want to lead you guys astray. So yes, CopX from Global X. So if this is something that interests you, you guys can check this out. I'm not going to go, you know, in depth here, but you know, these are copper miners. There's also another ETF from Sprott ETFs. I don't even know the ticker. I haven't looked at this position in so long. Hold on a second. Sprott. So COP, I think it is. Yes. So if you're interested in another ETF, all right, it's called COP, COPP. This is another phenomenal company. Now, I would probably, in my own personal opinion, go, well, I went with COP because it's from Sprott. All right. Sprott, if you guys don't know, we've covered them a few times on this channel. But these are subject matter experts in the mineral metals, you know, commodities field, right? You can look up Eric Sprott, I believe his name, on YouTube. He's done a ton of interviews. Very, very smart guy. There's another guy named Rick Rule. Very, very popular guy. He's a name brand in the space. He used to work for Sprott. All right. He no longer does work in Sprott, but there's a quote out there. And Victor, I don't know if you're listening, but you can probably explain this better than me. But the quote is, you know, if you're looking for spot, then you go with Sprott, right? Or spot price is Sprott, right? So basically what they're saying is that, you know, Sprott is the center of all of this, right? They are the best industry experts. So that's just my opinion, right? Just my thoughts. I'm not trying to lead you guys astray and say you guys should go all in on COP, right? Or copper. But if you want to at least do some homework and do some research over the weekend, this is where I would start, right? So that'll do it for me, guys. I think I covered quite a bit here. Let me check the comments here. All right. So we have Serial Beggar. He's saying COPJ, COPPA, and ICOP are other copper plays that people can look into. And then CPER. I believe I have CPR. I think I do. I don't know. No, actually CPR is spot price copper. So I do not have that. So yeah. And then Skeptic says FTBI. I read that as FBI for a second. ETF. Okay, yeah, we can take a look at this one real quick. Anyways, guys, that'll pretty much do it for this stream. So I'll open it up to the floor for a couple of minutes before I get out of here. We're at an hour and 17 minutes. I have to get going here in just a moment, but if you guys have any questions or would like to bring up anything in the chat, please do. Now is definitely the time. Hey, look at Farouk. My Neil's portfolio paid out $1,600 today. Congratulations, man. Congratulations. That's what I'm talking about. Hey, that is what I'm talking about, man. That's like a bag of chips and a movie theater ticket these days. I'm just kidding, man. But that's awesome, man. I like seeing those kinds of wins. Okay, let's go here. All right, let's check this out. First Trust Balance Income ETF. I'll open up that document in just a second, Skeptic. I'm just curious what this is. Multi-asset. Oh my God. All right, this is a word wall. I'm not gonna read all that. Oh my God, there's another word wall. Bro, nobody got time for this. All right, let's see what this is. SEC yield of 7%. So that's pretty much the yield, or 6.3%. Management fee is almost a full percentage point. Okay, let's see. Blah, blah, blah. The Bloomberg Moderate Allocation Income focused index is constructed to track a portfolio of income generating first trust ETFs across 3 asset classes: equities, fixed income, and commodities. Oh, okay. I see. Okay. All right. I get it now. I get this now. Scroll down. What do you want me to scroll down to? Okay, so I'm seeing the top holdings. We have a bunch of first trust stuff. It only has 14, and these look like these are all ETFs. So it's a basket of its own ETFs. So you have the S&P 500. So you have the buy right income ETF at almost 20%, and then you have the NASDAQ at 10%. And then you have just a standard vanilla S&P 500. You have small cap, right? Mid, rising dividend achievers. You have gold strategy at almost a 6% weighting. Okay, so here's the composition. So equity core is 30%. Investment grade fixed income is 22% equity value. Equity growth, 19 and almost 10% respectively. Government fixed income. Commodities at 5%. This is a nice ETF. I mean, this covers pretty much all the basically the whole across the entire board of assets, right? This is, man, again, skeptic, you be finding these really crazy ETFs, man. Now, what I think I'm gonna do is yeah, this is really nice. I like this one. I mean, it's not something I'm gonna open a position in today, but I do like this ETF. I could see this one doing pretty well. As a matter of fact, let's pull up a chart while we're at it. Let's see how this is done. No, not GBTI. Come on. Act like you type on a keyboard. Okay. Did this just drop? No. Okay. So this came out 30 May 2025. And it has an 8% gain. All right. I'm not going to hold that against it. Let's not hold that against it. All right. Because that's not the full story. It still went up in value. Big deal. All right. That is a big deal. Let's do a comparison. Because I think that'll give us a better idea. All right. Let's do a quick comparison. All right. So we're going to benchmark it across SPY. So the S&P 500. And we're going to do FBTCI. Come on. What is it? FTBI. Okay. Wow. All right, let's try to go back. 529. We'll do 530. Oh, man. Let's do 530. All right. Okay, so obviously SPY's outperformed, right? We know that. But this is only price return. Let's see what the total return looks like. Also a little bit of underperformance there. But I mean, it's you know, what's the distribution rate on this bad boy? Let's see. So it's 6%, it's a monthly. So it rebounds to semi-annually. Hold on. I see Skeptic did message me in the chat, or he did message me privately. Let's see. Yeah, so yeah, these are all the individual ETFs that are in that makeup. God, don't get sick, guys. Do not get sick. So we have from Michael Anthony, he says, I bought PD near the low near the new low that has great fundamentals that bounce back over $7.10 all the time, that has a PE of 4.10. The shares are cheap, beats earning all quarters this year. Let's take a look at PD. Why does that sound so familiar? PD stock. PagerDuty? I don't know about this one. I don't know about this one. We'll put it up, just whatever. I don't know if this is the one you mean, Michael. Or is it? Yeah, that's PD. I don't know if this is the one you're talking about. I guess it would be because it's $7.10. Yeah, but this chart does not inspire confidence, my friend. At least for me, it does not inspire confidence. But again, who the hell am I? I'm just some random guy on YouTube, right? Maybe this might be an super undervalued stock that's going to be that's going to pump, to probably $20, $25. Me personally, I don't know anything about this company. PagerDuty is an American cloud computing company specializing in a SaaS incident management platform for IT Now I know who these guys are. Okay, I remember these guys now. Yes. I used to work for an IT company that used them. And what they did was whenever there's incidents that came in, it would actually be able to like call you or page you or text you what the incident was. So it's, because in the IT field, especially for a shop that only ran, 8 to 10 hours a day, right? They didn't have an overnight shift. What they would have is the PagerDuty, right? Or someone would be on PagerDuty. And PagerDuty is, you can't go out and party, you can't get drunk, right? You just have to be available in case something happens overnight, right? You got some extra pay. Some places you got no extra pay, right? But that's what PagerDuty was. I remember this. I do remember this. But again, this does not inspire confidence in the stock. But hey, if it works out, it works out. I don't want to steer you wrong in your thesis, but hopefully it works out. All right, ladies and gentlemen, I think that's going to do it for me. I appreciate you guys. Thank God it's Friday. I want you guys to go out and have a wonderful weekend. All right, get away from the desk, get away from the computer, get off finance news, go out, touch some grass if you can, if it's not snowing, right? Get some sunlight. Absolutely. Get some of that vitamin D if you can outside. Again, I always appreciate you guys joining me for this coffee hour where we just talk about, investing, stocks, where we're talking about the market news and kind of like how it all impacts our portfolios. It's always a pleasure. I do enjoy it. I might do a stream on Sunday night, probably, for you guys, where it'll probably just be an invest and chill type of session. Probably no news. We'll probably just get on and talk a bunch of nonsense, kind of like I do now. But always appreciate it. Yeah, go out and touch some snow, says Skeptic. And we have Michael says, yes, every day pops over $7.10. That great company. I think I sold off because of AI. But Trump said on his speech, like AI, with the shares will pop over $7 again. Probably. I don't have an opinion one way or the other. Right. We got Dividend Rocket in the chat. He's a YouTuber as well. Make sure you guys check him out. Always a pleasure to have you, Dividend Rocket. We need to get you on the show at some point. We have the Working Investor. You guys need to check him out on YouTube as well. Always appreciate it. Everybody. All right. With that being said, guys, you guys have a great rest of your day, your evening, your afternoon, wherever you are in the world. And I will catch you guys in the next stream. Take care.